Steve Weiss, you're in this one. What are you inclined to do now?
You can never own enough of the good ones, or sometimes you can't own any of the good ones, right, Jim? But I'm not adding at this point. I'm happy with what I have. The stock's never attractively valued, so it's less attractively valued at this point.
What about the report, in your view?
I thought it was good. I mean, look, my concern was what's happening with cloud. I got some good news from Google with cloud, got some decent news from Microsoft on cloud, so that took out the major risk. Less concerned about the retail business because that can always be explained away, but the bar was set pretty low across the board for Amazon. A lot of doubters. The stock's still far off its highs, so I wasn't really worried. I thought the setup was pretty good, but you know, when you look at some of these names, you know, it's such a binary event that day. They don't act like they used to with 1 or 2% moves. I mean, they're having moves like this, which are ridiculous.
Especially,
right?
I mean, when you compare it to the low volatility in the markets overall, to see these sort of outside moves, you know, it's sort of surprising. But even the retail business was a bright spot here for Amazon, which was a surprise. Operational efficiency, they did see the consumers start to trade down. But overall, Brenda, I mean, this is really good news here.
Yeah, I think especially on the operating margin side in the U.S. retail business, the operating margin came in 3 times better than what some expectations were. So really strong results. And I think that's what many investors in Amazon have been waiting for a long time. And here we are. We always knew there was a better earnings potential overall given the investments they've been making over the last many years. And it was really nice to see some of that flowing through this time around.
So Steve made it a point to say that you do not own this. Oh, the winner on the day, Jim Lebenthal.
I told you I was going to try to be good today.
But, I mean, at this point, does this look even better? Does the Amazon story look even better today than it did yesterday?
Well, by definition of having beaten, yes, it does. That said, you know, when you look at something like Amazon Web Services, the highest margin part of their business, and you look at that growth rate, yeah, it's 12%. That's great. You know, this isn't the growth rate that we were seeing 3-4 years ago. This is a company that has a large valuation to it. So I'm not inclined to chase this right here. I'm happy for my friend Steve that he's finally investing in the market. It's been, you know, a long time coming. I told you I'd be good today. I'm trying. I really am. But look, I also, Mel, I have to say that, and I've been saying this for a couple of weeks, that this is a market that's kind of getting ahead of itself. These are the almost the dog days of summer. Light liquidity. You can get an outsized response to something like this. I'm happy that I've raised a little cash over the next 2 weeks, but I would not use it to chase something like Amazon on a day like today.
Right. We mentioned this big stock pop. I mean, a surprise, but especially given that rates are still fairly high. We've retreated on the 10-year yield, Shannon, but we're still above 4%, firmly above 4% at this point. And a high multiple stock like Amazon still has the legs to go double-digit % higher in one single session.
It's amazing, Melissa. I mean, if you look at the correlation between moves in the 10-year, for instance, and last year with stock prices, particularly for growth stocks, you know, you're seeing this disconnect that obviously we didn't experience last year. And I think people should be surprised if you think about just the gains that we've seen in Amazon year to date. Good earnings report, but you compound that over what we've seen in the rate environment over the last 4 days. It's shocking to me that we're seeing such an upside move for Amazon and frankly, not more of a downside move for Apple. I would have anticipated, just given all of the shifting dynamics of what's happening in the yield curve, when you think about what's happening with the Bank of Japan, all of the different factors that are going to change the rate environment for us over the course of the next 6 months, and you're not seeing that being reflected in these stocks that have experienced so much multiple expansion already. I'm very surprised at the sharp move this morning and into the middle of the day.
I mean, this time around, in terms of the yield environment, it is a little bit different because it's not just the Fed raising rates. Now we have the Bank of Japan, you know, basically stepping away from yield curve control. We know the Treasury is going to have outsized issuance, particularly on the long end. Steve, are you concerned that higher yields will ultimately catch up with your Amazon trade? Is that a fact? I mean, when do you start factoring that in? Because there are other issues here at play, not just the Fed raising.
Right. Well, there's been a tremendous disconnect between what's happened with the yield curve, right, which is inverted, and what's happened with rates overall over the last year and a half. It hasn't gotten in the way. So when you're talking about companies like Amazon that have no problem funding, if they and you know, throw off cash, I'm not really concerned. I do continue to have concerns in the overall market. I have put more capital to work at prices where you get dislocation in the market. But, you know, the economy, as we saw with the spending, with retail, with Amazon, it's sort of brushing it off, and we're going for a soft landing.